Headlines abound with bad news. From Ebola to the midterm elections to the current market volatility, it's easy to worry about the sky falling. Now, I certainly don't want to comment in this video on health or political issues, but let's talk about the stock market. Now, historically, the month of October is often a tough one for the market. It seems that as soon as the third quarter ends, traders look to trim their holdings, freeing up cash, which can be redeployed as we enter the holiday season of Thanksgiving and Christmas. Now, whether we'll have a Santa Claus rally is yet to be seen, but we have definitely seen an October sell-off playing out. Also, it's not uncommon for market jitters to coincide with the season of quarterly corporate earnings announcements. Now, the start of each season typically sees a variety of negative pre-announcements for certain companies. And it's easy for market participants to extrapolate the negatives to the broader market outlook. Is it just a seasonal thing, or is something else going on? While I don't have a crystal ball better than anyone else, here are some things to consider. First of all, energy prices continue to decrease, which is good for us consumers, but not so good for the energy producers. Secondly, Germany recently announced that its manufacturing section was softening. Now, since Germany has been the rock on which the Eurozone concept has been anchored, if it drifts into recession, this could affect sales of goods and services by American companies operating in Europe. Finally, thirdly, the labor market continues to improve. Now, this should be seen as good news since employed workers spend money to stimulate the economy. However, some people read this as a signal that the Fed will begin to raise interest rates soon, even though they've said it is some time away. Of course, this is all exacerbated by the media, who make money by making it sound as if the world is coming to an end. Now, given the strength of our economy, I doubt that that's the case. However, during periods such as these, it is important to remember the financial planning principles we employ when working with our clients. First of all, we diversify investments across a wide variety of asset classes, including non-correlated assets such as fixed annuities, which cannot lose value due to market fluctuations. Secondly, we utilize investment strategies which includes some mechanism which limits downside exposure. We have very few clients with all or substantially all of their funds in strategies that can experience the market's full decline. Many strategies are dividend centered, and that dividend flow will continue uninterrupted unless companies reduce or eliminate their dividends, something that has happened, historically speaking, only during the most severe recessions. Finally, let's remember too that the market has done very well in recent years, and occasionally the market reclaims some of those gains. It is very unpleasant, but it's not abnormal. Now, I'm hopeful that we will finish in the black this year unless something more than we see now occurs. However, please don't hesitate to call me if you have any questions or concerns.
This has been a Loki production.